Hello, everyone. Welcome to today's live. My name is Lunta Di La Paulo. I'm the managing director of Yet Accounting and Tax PLLC. I'm excited to have you here today because we're going to be talking about a very important subject that a lot of business owners, unfortunately, don't realize it's there, it's sitting there, and it's creating unnecessary risks for their businesses, their legacy, and even their own family. So today we're going to be talking about hidden risks and the dangers that lays underneath the rug that could seriously destroy your business, destroy your legacy. And today we're going to be spending our time talking on the subject of revenue and client base. And I want to stress this because as you'll see throughout our presentation that a lot of business owners who are serious about their business don't realize a lot of this danger until it's a little bit too late. So just to give you a roadmap of what we're going to be covering today, right? We're going to begin talking about why this matters, why this hidden risk, why these element that are sneaking under the carpet, operating in the dark, could seriously impair your business ability to achieve its result, to achieve its objective. So we're going to talk about why it matters, and then we're going to move on to discuss how you should perform a serious analysis similar to what we're going to be showing you, and then we're going to wrap up with what's next from here. So we're going to be spending here together about 30 to 40 minutes max to discuss on these very subjects. So with no further ado, let's begin talking about why this matters, why you need to understand your revenue, why you need to understand your customer base. It's really critical, it's important, right, that you understand, that you get a sense of why what your revenue base is made up, is composed of, what's the sales mix, what products or services are selling the most, and what are not selling at all or just creating losses for your business. Okay, so we're going to be talking about some of these elements. So but here's something that I want to throw at you just to help you begin thinking about how serious this is, right? We've had clients who relied on one single uh, uh, you know we are a CPA firm and we serve small businesses, and we had a business owner who relied largely on the revenue from a couple of very large clients. And guess what? What's going to happen if one or two of these large clients leave them? Okay, you need to think about that for your own business. If your business relies, right now we have a client whose major client is one of the states in the US, and it's several divisions. So the problem is if some of these divisions walk away because they're not being compliant, what's going to happen to the business, right? So we need to think about that. The other thing we need to really carefully analyze is what would happen to your pricing decisions when you don't understand really whether a given product is profitable, and you end up pricing a product at lower than the cost of producing that product. Sometimes it's really important for business owner to have those kind of conversation, because they keep telling themselves, I'm just gonna price the product based on what the market is telling me. But what the market is telling you may not be the same cost structure that you have for your business. So for you as a business owner, you really need to be careful. You really need to be prudent when it comes to things like that. So it's really important that you understand that, right? Your pricing decision may be impacted or affected based on your sales mix, based on the profitability of each product, of each service, or even the geography where your clients are. The other imagine if that I'd like you to think about is if you're trying to sell your company. And I'm going to show you an example of what actually happened to us when we were looking to acquire a CPA firm somewhere in Michigan. Okay, so we've looked at several businesses, several CPA practices across Michigan in other states, and we see similar stories. We see similar problems, similar issues, and I'm gonna show you some of one real life situation actually. And imagine if you're trying to sell your business and then you discover that two of your clients bring over 40% of revenue. That's a serious problem. That's a really challenging problem to deal with, especially if you are in a urgent uh, transaction process. So you really need to think about that a little bit more seriously. Okay, so as we talk about these things really do matter for you as a business owner. They really do matter for you because of what they can cause in the company, right? As I begin saying, a lot of the risks, the issues that we see when we are working with business owner are the hidden things, the hidden stuff that they do not understand, that they do not have any clue whatsoever that they are taking place, that they are happening inside their business, right? So if you don't understand your client base, if you don't understand your revenue sources, your revenue streams, right, you might not be making good pricing decisions because you don't understand the data underlying the fundamentals of your business. The other element that will impact that will significantly impact your business is the quality of the client base, right? If you don't know which client you deal with, you might be doing business with clients who are close to declaring bankruptcy. You might be doing business with clients who have serious financial strain, financial issues that could end up affecting negatively your business. So, as a business owner, you need to understand, right, your client base, understand the quality of clients you have in your company, and we're gonna walk you through an example on how we actually assess different clients. Okay, and this is exactly the same thing we typically do for most of our clients with some changes here and there. Okay, you also need to think about this because it really tells us a lot about whether or not your revenue is sustainable, whether there is risks around your revenue. If your revenue is not sustainable, if in the long term we're not seeing the possibility of this company continuing to generate revenue, we know we're going to have some serious cash flow issues. And as a result of that, we also know that this business is more likely to close its door than to be around in the next, let's say, 1 year or more. So we gotta understand that. We gotta understand that. And last but not least, it's really important for us to understand, okay, our revenue and customer base, because by not understanding it, by not having the insight, the data, the business intelligence around this, we are essentially running a, we have an airplane being piloted by a blind pilot. So you don't want to be in that position. So how do we do that? So what I'm gonna begin doing now is to show you an example of a CPA practice we were looking to acquire in 2023. Okay, and of course we maintain all of the information confidential. What we're gonna share with you here are some of the numbers we have modified to fit a little bit to our presentation, and we have removed any name or anything that would tie directly to this business that we were looking to acquire. So the first thing we wanted to look at, besides demographics, the city, the town, the overall macro data in that region, in that is relevant to that area, right? We wanted to understand the client base. And if you understand a little bit about CPA practices, you'll realize that the age group of clients, it's very important, especially for tax practice, for businesses or CPA firms like these, which relies largely on tax preparation services, right? So as you can see here, right, over 61% of the client base the last 3 years, right, we're over 65 years of age. These folks are starting to go into retirement. They have less need for, professional service. They're some of them are starting to sell their businesses. The level of complexity on their tax return preparation is going down, and therefore the fees charged by the CPA firm. So you actually see that, folks between, let's say 18 to 55 years of age are the minority, right? A significant minority across the year in the past 3 years from the date we are looking at that. So as a business owner, if you don't know your numbers, you might be thinking that your business is valuable or much more valuable than the market would actually appraise that company. And that was one of the problem that we actually found in this business, right? So we ran some stats, right? 2021, 2022 numbers, and we looked at the average, the minimum revenue, the maximum revenue, and this year, the average income or household income or in tax returns. And then we looked at the standard deviation, average plus standard deviation, average minus standard deviation, right? So we looked at these numbers, and based on the state, the regions macro data, the average income was actually above the average of the city, the state, as well as across the U.S. So that was slightly good for us. But again, the issue was that when we look at that, just by going back one slide, we know that most of their client are over 56 year of age over, right? So we know there is an incredibly aging population there in these in this CPA firm. The other element that we looked at very closely was the number of clients across the last 3 years, and there was a little bit of fluctuation, meaning that they were doing a lot of work, right, for a very little bit of pay, right? Their revenue was below 500,000, and they were, really, doing a ton of work. They needed, a little bit more people to meet the needs of the client. And again, this is approximately where a lot of their clients were, as I said, largely in Michigan, a few more states, right? Also adding a little bit on the complexity of what, this tax practice actually does. So after that, we also looked at the number of tax returns prepared, right? As expected, right? The vast majority were like Form 1040, right? Individual tax returns. And we also saw a little bit of business tax returns there, right? So that was for the year 2022. And we also wanted to understand revenue by top 5 clients, right? And as I said, very well put, right? As the clients age, right, the revenue also declines. So you can see in the first client, the revenue, it's declining in 2022 and then 2023 significantly. For the second largest client, right, we're seeing, similar trend. The third client, it's pretty much the same thing. The fourth client, right, we actually didn't see revenue for 2023. And then for the fifth client, right, again, similar trend in revenue decline, right? So not only that, we wanted to look at billing on a monthly basis. Again, April or March and April typically tend to see the highest amount of billing because of the tax season. That's just the nature of the business. That's really what happened in tax practices. That's for 2022. This is for 2023. We saw a little bit more increase there in billings, and then the total revenue was still slightly lower than in 2020. And then 2022, right, we saw a significant increase in April, again, due to the tax season, right? So when we look at the client tenure, right, the very important metric, we're seeing that, each year across the board, we have slightly more new client coming to the firm, meaning the churn rate of this CPA practice is slightly higher than what we would have expect on average, right? So a lot of new clients every single year, right, compared to previous year. So it seems like they're good at bringing new clients, but they're also losing a lot of they're also losing a little bit of clients there. So let me show you one more example here. I believe I'm gonna need to stop sharing my screen for a second, okay, so that I can show you another example of what's actually happening here. Okay, so we're gonna be looking at this example. um, Share my screen and customer profitability tab, and here we go. Perfect. Okay, so what we have here is another major project we actually worked on, right? And we're looking at a client who does operate in the marketing agency. And of course, we changed the client role, the employees covering them, and the revenue, right? Each one of these client brought to the business, right? The percentage of what this revenue means to the overall company, the services they're purchasing, right? We really had to do a lot of manual work to recreate these for the client. We looked at where these clients are based, what the sales team had budgeted that we should achieve from these clients, right? The variance, whether it was positive or negative. And then we also looked at whether the company was at the risk of losing these clients. We also looked at some additional variable, right? Things like the level of enjoyment we have working with this client, the timeliness to pay from this client, how effective the communication from this client is, and the overall rating of that client. So, based on this analysis, right, again, I actually skipped something here. We also wanted to look at what's the profitability of each client, what's the variable cost of serving this client, that's the contribution margin, what's the cost allocated for the salary of the staff covering this client or overhead cost, and what's the level of profitability from these clients. And what we ended up realizing, right, some of the clients that are small were making this client lose a lot of money, really bleeding significantly, right? And the top clients typically were generating a little over 80%, or contributing a little over 80% to the bottom line. So that was very insightful for the client to understand which client was making them money, which client was losing them money, and in particular, right, begin to develop or to build a revenue budget, right, to make sure that the sales team is actually is actually focusing their effort to the right place. What we ended up with after that analysis is this, right? What services were bringing the most revenue, right? Paid ads was definitely the leader, and then we had social media manager, and then the ACO service was also bringing significant revenue, and last but not least, right, outsourced CMO was there. Employees bring the most revenue to the firm. Jane Doe definitely bring a lot of money to the company. We also looked at the state where the company was generating the most money, right? Again, Michigan was driving most revenue, and then Illinois, right, for this client. We also looked at the top client by revenue, right? We're looking at client 13, client 17. We also have client 9, client 5, and then client 1, right? The client, the really rainmakers for this firm. But we didn't finish our analysis there. We looked at the customer rating, right? We like to break down the rating into three major groups. Class A client, right? Client who are really great. We want to keep them. Client B, they help us make a little bit of money. We want to move them to bucket A. And class C, we like to see this as little as possible so that we can move them to class B or to fire them. So this is what we had. The vast majority of the client base was coming from group B of the client, and then followed by group A. So based on that, we had, a few summary here, some key takeaways for the client to quickly glance at and know exactly where things stand. So this is to say, right? This is to say that as a business owner, you need to be you really need to be careful. You need to pay attention on what's happening in your business, in your company, because if you don't understand your customer base, you don't understand your sales mix, right, you're really flying in the blind, because the top line typically drives your bottom line or have typically a significant influence on what your bottom line would look like. Now, for us to wrap up our conversation, right, I just want to show you, okay, where do we go from here, right? What's next? So one of the things that you can do as a business owner is really to think in terms of, okay, now that I have this information, what should I do? And we recommend you to spend time understanding your business. If you don't know how to do that, we're here. We'll be more than happy to help you, to assist you. But please don't continue flying in the blind. Don't continue flying not knowing what's happening in your company, in your business. So you gotta make sure that you understand your customer base, you understand your sales mix, you understand what are the services, the product, or even the market, the sector driving significant profit for you, and which area are really losing money for you. Okay. And if you need to get in touch with us, here's our contact information. You can visit us at yetuadvisory.com, or you can send me an email directly at lcpaulo@yetuadvisory.com, or just shoot us a text message or give us a call at 773-937-1264. Again, it's been an immense pleasure to spend these almost 30 minutes with you. I had a lot of fun preparing this. I hope this was helpful to you, and if it was, helpful information for you, share with other folks, with other business owners who might benefit from this. Again, my name is Lunta Di La Paulo. I'm the managing director of Yeto Accounting and Tax PLLC. We are a Chicago-based firm, and thankfully, we have managed to grow a little bit, and now we also do business in Africa, helping businesses across Africa succeed. So if you know someone who needs our help, we'll be more than happy to connect and spend a little bit of time. Have a great rest of your day. God bless you, and I'll see you soon.